People tend to overestimate and also underestimate success and failure, I find. Let's return to the concept of reversion to the mean, which is the basis on which value investing works. And that idea is that with financial assets, something that's been very good will in the future tend to be a little bit less good. And something that's been very bad will in the future have a tendency to be a little bit less bad. So one thing that I think is controversial perhaps is real estate. So my view as a value investor and as a believer in mean reversion is that we've had a very optimistic and buoyant real estate cycle, buoyed by a lot of different factors, and that in the future that cycle is likely to be reversed. And people don't like to hear that, and people don't believe it because for much of their adult lives they've enjoyed the benefit of a rising real estate market. But to my recollection, it's still a cyclical market. And I remember in 1993 buying a house that was half the price of what it had been in 1990 when a recession began in the middle of Toronto. And so 50% down in price over the price that had been three years previous. So I don't think that that's been outlawed. And I think that this real estate market has been so buoyant that it is very likely that the down cycle will be also strong. I think it will be resisted because there's a lot of business that's based on a strong real estate market. And I can see a situation where it slowly unwinds, where buyers pull back their bids, where sellers hold their offers in the hopes of matching the price that their neighbor got 6 months earlier, but eventually capitulate to a market that's in decline. Reversion to the mean.